Good afternoon and welcome back to a special plenary session on interplay of GST in the road to $5 trillion economy. We have very eminent speakers with us. Mr. Pulak Shah, Partner Tax and Regulatory Services, Price Waterhouse and Co LLP, Co-Chairperson of our Indirect Tax Committee, Bengal Chamber of Commerce and Industry, and Mr. Vivek Jalan, Chairperson of Fiscal Affairs Committee, the Bengal Chamber, and Partner Tax Connect Advisory Services LLP. Now, I would request Mr. Jalan and Mr. Saha to take the session forward. Over to you, sir.
Thank you, Arnab. As we have decided, Mr. Shah, I would request you to initiate the discussion, and thereafter, I will speak once you complete.
Okay. Thank you, Arnab. Thank you, Vivek. You know that what is the interplay? Interplay between GST and country's dream to achieve $5 trillion economy by 2025. That is where what is the interplay. So before we go for the interplay, as you all are aware that GST, what is GST? You know that everybody by this time is aware of what is GST. It subsumed a substantial number of indirect taxes and to make it a one tax, and this is the biggest ever tax reform in our country after the independence. And it has a lot of good things, a lot of bad things, and we are still struggling. Now, how GST is going to help to reach to that 5 trillion economy where we need to discuss in today's session. Now, when I was seeing into the retrospective effect from 1st of July 2017, when the GST was implemented, since then, what we are seeing that yes, the government has tried its level best to implement GST to overcome the problems, and it is since the dream of the country since inception was to make it a digitized economy and the compliance to be completely digitized. And because of the dual GST model, it was becoming a very difficult proposition, and stakeholders have suffered a lot for that. Government has also come out with various clarifications, various timelines, extended the timelines, etc. So in this way, it has helped. So I think that this is how the government's plan, and I will take up later on. Let Vivek start, and Vivek gives his view. So this is the context I have started, and I will give you a couple of issues like challenges, etc., to reach to that trillion economy, and also the what is the rosy picture of the GST in present situation. Yeah, Vivek.
Thank you, Mr. Shah, and thank you to Bengal Chamber for giving me this opportunity to share my views on this very, very important issue on reaching the 5 trillion GDP economic goal within few years, 2025, as the Honorable Prime Minister of India has set for his cabinet and for the country as a whole. Now, friends, let us understand what is the, to set in the context, what is the GDP of the country. Over the day, you must have understood it through various sessions. But I would like to focus on one important point, is that today India might be the 5th or 6th economy in the world with a $2.6 to $2.7 trillion economy. But what is important to know, it is the per capita GDP. I'm telling you the latest data as of February 22, the per capita GDP is $1927 only. And that is where India is almost 110th as far as 160 countries in the world is concerned, approximately. So that is something which may need to be improved. Now, how is this relevant in terms of GST, or what can GST do to help in achieving this improvement? Now, the formula for achieving GDP is C plus G plus I plus X minus M. C stands for consumption, G stands for government expenditure, I stands for investments, X stands for exports, and M stands for imports. As far as GST is concerned, it is a consumption tax. So as the consumption of goods and services in the country increases, so will the GDP increase. X minus M is exports minus imports. That is the trade balance within the international trade balance, which as of now it is improving, but by and large it does not contribute much to the GDP. So we have to focus on C, that is increasing the consumption, and that is where GST is directly linked. Now, how is it linked? Today, India is clocking around 2,70,000 crores as far as GDP is concerned. 2,70,000 crores dollars as far as GDP is concerned. Now, in this year's budget, if you see the budget, the estimated collection of GST and central excise to the extent of estimated collection of petrol, etc. is concerned, is around 21 lakh crores. As far as GST is concerned, I'm talking about state as well as center. The estimated collection of GST is around 14 lakh crore. Only today or yesterday in the Economic Times, the Revenue Secretary has said that the average rate of GST is 12.3%. Assuming that all products in India, goods and services, they are under GST, therefore it brings the contribution of consumption in this 2,70,000 crore to the extent of 1,15,000 crore. Yes, friends, out this 1,15,000 crore dollars of GDP which is contributed by consumption, this has to double to increase this $5 trillion goal. And this is where GST will play its part, because it is a consumption based tax. And it will not only help in reaching our consumption goal as our GDP goal of $5 trillion, it will also help in improving the GST collection and thus reducing the fiscal deficits. Friends, to set in the context, I would bring another point before I hand over to Mr. Shah again for bringing in few issues, is how do we achieve this increase in consumption? Today, 65% of the population of India are residing in rural India, right? 65%. And those are the people generally who will consume more if the per capita GDP or per capita income of theirs is increased. So to set in this context of achieving the 5 trillion economic goal and the interplay of GDP, I would state my first point over here is that the government should boost and reduce the rate of GST for the rural products which are consumed in the rural segment. Especially, I would bring over here the rural real estate segment. So, over to Mr. Shah for his further comments before I take you through the nitty-gritties.
Yeah, what Vivek, you were talking about that rural markets, what I was seeing that when I was seeing the Nielsen data, right, Nielsen data, which has been reported into the media articles, what we have noticed that in July and September quarter, FMCG industry has grown by 12.6% as compared to the last year. And the growth engine is because of its urban market demand. But when we have seen that compared with the rural market, there is a slowdown of 2.9% during the same period. Though the FMCG has grown by 12.6%, but the rural market has gone down by 2.9%. So had the two rural market not been gone down by 2.9%, perhaps this figure would have been more than 16-17%, because our majority people do stay in rural markets. Even another important thing is that, that tractor sales, the tractor sales declined by 27.5% in December 2021 as compared to the last year, which demonstrates that there is a severe weakness into the rural sector. So unless until that rural sector is boosted up by the government, and how it can be done, that two-wheeler sale has been declined by 19.9%. Why? There is a huge rate of duty on the two-wheeler. And we have seen also that retail sale of the passenger vehicles has been contracted by 10.9%. Why? It is just because of huge rate of GST as well as compensation cess. Now coming to the point that what is compensation cess? Compensation cess to compensate the state for loss of revenue. Now compensation cess for loss of revenue, that this government is now compensating, and for that matter they are charging compensation cess. Now the time has come, because we all remember that when GST was introduced, that time it was said that couple of items, mainly that petroleum and petroleum products will be brought under the GST in due course. Now we are running up 5th year. There is no discussion. If that sector is brought under the GST, there would be a huge boost up into the economy. There would not be requirement of any compensation cess, and there would be a huge demand. Once the demand grows, and automatically everything will boost up. So this is where the data, what we have seen, that how GST is playing a very, very important role to reach at the 5 trillion economy. And now the time has come, government should look into this. Now over to Vivek.
Yeah, thank you, Mr. Shah. Now, taking forward from this rural economy and the rates of GST on rural economy products, you have rightly talked about FMCG, tractors. I would like to bring, as I started, on one more sector, that is this rural real estate sector. Also, the variation in rates. Now, the government has to see this rural sector as a whole, and in the rural sectors, various sectors like real estate. Now, the rate of GST on earthen tiles, for examples, is 5%, which is used in real estate sector in the rural areas. But the rate of asbestos sheets, AC sheets, that is 18%. That is a huge disconnect over here. 5% earthen tiles, 18% asbestos sheet, and there's a huge gap in the rural real estate sector itself. And this is the differences in the rates by reduction of the all items of the one sector, the rates. I'm sure this rural consumption can be tremendously boosted, and that will play a major role in boosting the consumption. Another one point I would like to highlight over here is this federal structure of GST. On paper, it looks, a very, very good structure where the GST Council is taking its decisions, which is a federal structure. And now the finance ministers of the state and central finance minister, they are combiningly taking decisions. But on ground, is it leading to ease of doing business? So today I was in the GST department. Now, for a case, I will give an example for 1 minute over here, which will help in understanding the ground reality how GST is working as far as ease of doing business is concerned. Now, one of my clients, they purchased the certain goods from outside West Bengal, and the dealer's registration of that outside state, the supplier's GST registration was cancelled since the very beginning. And therefore, the input tax credit of the recipient, that was completely disallowed. Now, why this issue is happening? Friends, the most important, if you go to the ground level and talk to the senior government officials in GST, this denial of input tax credit, there is rampant blockage of input tax credit in GST by the field officers on various reasons to believe, which are not documented, of course. The basic issue is that a commissioner sitting in West Bengal or in any state, for example, they do not have any control over a supplier, over a taxpayer who is registered in another state. And therefore, what they resort to, the most easiest thing is, okay, today I have a control over my taxpayer who is in my state. Let's block his input tax credit. Let's deny his input tax credit. I will not only go to investigate his supplier. This is a major issue which is happening due to this federal structure of GST, and also because state and center government officials, bureaucrats, somewhere there has to be an interface for bureaucrats to discuss. Great, finance ministers are speaking and discussing in the GST Council. But what about the ground level commissioners? Are they speaking? Is the state commissioner speaking to the central commissioner? Is the central commissioner speaking to his customs counterpart? The answer is no. And this is one of the reasons where ease of doing business is being hampered, and which will impact the consumption, and it will impact the GDP. So here, this I would propose is there has to be some localized, a state level committee which will play as a nodal role between state department, central GST department, and customs. Over to you, Mr. Shah.
Yeah, thanks, Vivek. See, what we have seen that government has announced that in January, the GST collection was almost 1.41 lakh crore. And in the budget estimate, financial year 22, government's estimate for the contribution of GST in the gross tax revenue is 29%. Now, what we have seen that we have not gone into details that why there is increase. And even what we have seen in the last quarter of 21, what we have seen that last quarter 21, we have seen there is a steady growth of tax collections. Now, what is the reason for steady growth? Is it for the manufacturing has been improved, service sector has improved? No. It is just because there is an enhanced rate. Now, whether enhancement of the rate of tax, whether it will boost up the economy, whether it will boost up the consumption, that is what the government should look into at this moment. Secondly, what we have seen that there are certain promises what the government has announced at the time of bringing in GST, that they would be giving credit, refund of input tax credit, if refund of input tax credit would be allowed in case of export. Refund of input tax credit would be allowed in case of inverted duty structure. And the concept paper or white paper, what we call, when the government has declared that it was, the word was input tax at higher rate than output tax. In reality, what we have seen when the law came, in reality, we have seen that when the rate of tax on inputs, is higher than output, inverted duty structure refund would be allowed. And that created the confusion. And we are all aware of it. The Supreme Court has affirmed. And Supreme Court said that no, you are not allowed to take the credit on capital goods. You are not allowed to take the credit on input services in case of inverted duty structure. Because the word has been in the law, word is section 54 subsection 3. It states rate of tax on inputs. But when we saw the concept paper, we saw that input tax, and there is a specific definition of input tax in the law. There is a specific definition on inputs. There is a specific definition of input services. So we lost, and Supreme Court has rightly given its view. Now what happened? Is it not a failure of promise by the government? What the government, when the white paper came, what was the government's contention? There would be single rate. There would be lower rate for the essential items. There would be standard rate for the normal items. Service would be charged at one rate. But in effect, what we have seen, variety of rates. Input credit was restricted. Input credit was restricted in case of a lesser rate of duty, and inverted duty structure refund was not given with a specific condition in the rate notification. There was a lot of representation. What has happened? What we have seen? The rate of that particular item has been increased. Even the latest one is that shoe and etc. shoe industry, they are suffering. Now the rural market, if they cannot buy the shoe, how the production will increase? And the rural market, that is why we have seen the recent study that rural market is not growing. If the consumption in the rural market does not grow, how the economy? These are the challenges government has to think of it. Now, apart from that, there are, in case of a refund, there is a time-bound refund as per law. But majority of the cases we have noticed that various unknown reason refunds were not sanctioned. Refunds were sanctioned late. And there is a still provision that refund, if the refund is not sanctioned within the timeline, then there would be certain amount of interest to be paid to the recipient of refund. Interest was not given. Then if somebody wants to litigate, then it is litigation to be done. Now, once you file an application, the tribunal has not yet been formed. Tribunal has not yet been created. We are running at the 5th year. Tribunal has not been created. There are so many unsettled issues are pending because we are unable to file the appeal before the tribunal. Tribunal has not been set up. And recently, and about last year, what we have seen that Allahabad High Court has given a directives that the tribunal has to be set up immediately. But I'm not aware what is the latest status. So these are the things the government has to look into it for ease of doing business, for stability into the taxation, to reach to this. I know that 2025 looks very rosy at this moment and very aggressive, I would say, considering that the COVID, because when the announcement came, that time we have not seen the COVID. So COVID has taken 2 years from our life. So maybe 2 years and plus 1 year, maybe we can think of that 2028, it could be a 5 trillion economy if the government looks after all these challenges and helps to boost up the rural economy. Now, Vivek, thank you.
Thank you, Mr. Shah. And my concluding remarks, because we have, I think, 1 minute left. Arnav is already here. So, two issues which you spoke on, and my concluding remarks on these two issues. One is this promises which were made. One, pain area for industry. If the government officials, the ministry is looking at this video, e-wallets was a promise. Today, importers, they have an input tax credit in their credit ledger under GST, but while making an import, they still have to pay the IGST in cash, and which they cannot liquidate. In this era of post COVID-19, liquidity is a big issue, and I would request the Ministry of Finance to please look into this e-wallet promise which was made. Number two, last point is on the time-bound investigation. This would really help and for ease of doing business under GST. A case in point, I will tell Mr. Shah, you spoke about refunds under GST. There is one agency, investigation agency called
DJGI.
Sir, I think there is a connectivity issue. Can't hear him.
I think that he got disconnected.
Yeah. Sir, with your permission, can we conclude the session? Mr. Shah?
I think that we already overshot the time by 1 minute.
Yeah.
Other speakers are waiting.
Yes, sir.
So
yes.
I think that we should conclude here. Thank you very much for patient hearing. Thank you once again.
Thank you, sir. We are thankful to Mr. Pulak Shah, Partner, Tax and Regulatory Services, Pricewaterhouse & Co. LLP, Co-Chairperson, Indirect Taxes Committee, BCCNI, Mr. Vivek Jalan, Chairperson, Fiscal Affairs Committee of the Chamber, and Tax Connect and Partner, Tax Connect Advisory Services Limited. We are also thankful to all the audience who are listening to us and all the media friends, and also to all our sponsors. With this, we conclude this session. We'll be back in a couple of minutes. Our valedictory session on India's net zero pledge, what it implies for the Indian economy and its journey towards sustainability. Thank you all.
Thank you.
Thank you.